one company, one that you've probably never heard of, has assets equal to over 40% of the US's GDP. And alongside just two others, it controls nearly 90% of the most powerful companies in America. If you think that's crazy, just wait, because we're only scratching the surface. There's so much more to uncover, and this isn't some wild conspiracy theory. We're sticking to the facts as we pull back the curtain on the 10 companies that secretly run the world. Number 10, NVIDIA. Some of the companies on our list are here not only because of how powerful they are now, but how powerful they will become in the future. A few years ago, most people hadn't even heard of NVIDIA unless they saw the company's logo on their video game loading screens. Now, NVIDIA is all over the news. So, what exactly does NVIDIA do? And why is everyone talking about it? Well, NVIDIA is almost single-handedly supporting the entire AI revolution. While the company has had its hands in a few areas of technology, it's best known for one thing: manufacturing GPUs, or graphics processing units. GPUs are responsible for producing the visuals on your computer. They take in digital data and they output visual data. Artificial intelligence requires massive data centers of interconnected computers to work, and high-performance GPUs are necessary for all of this computing power to work. Because, well, AI isn't actually intelligent. It needs a bunch of computers to run all the potential answers AI can give you and see which one is the most likely. And that's where NVIDIA comes in. It's cornered the market for high-performance GPUs. Up until now, they were used to produce incredible visuals for Metal Gear Solid. But NVIDIA saw the future. A few years ago, it realized that GPUs could do way more and started investing heavily in chips designed specifically for AI. They were called programmable GPUs, which could be customized to execute a lot of computations, like those used in artificial intelligence. Even though market experts thought this was a risky bet by NVIDIA, it turned out to be right on the money. And now they're the only game in town. They were the first and only people to invest in these GPUs before ChatGPT even made it out to market. In fact, ChatGPT itself was trained on 10,000 NVIDIA GPUs. As one Wall Street analyst said, there's a war going on out there in AI, and NVIDIA is the only arms dealer. Right now, every huge company like Google, Meta, Apple, Microsoft, and OpenAI all need NVIDIA chips to function. Their GPUs power chatbots, CPUs, and even self-driving vehicle tech. Looking at you, Tesla. Even though some of these tech giants and other companies have started to produce chips, NVIDIA is still light years ahead. Right now, the company has an 80% share of the GPU chip market. Maybe that's why the company's market cap went from $364 billion in 2023 to $3.65 trillion in 2024. In just 1 year, NVIDIA became the most valuable company in the world. Meanwhile, we've just been disappointing Duolingo with our Spanish progress. The company is now valued at over $3 trillion, making it the first chip company to ever cross that line. But that's what happens when 50 out of the 100 biggest US tech companies have to buy their chips from you. While that's great news for those with stock in NVIDIA, it also means the entire AI market is now dependent on the production schedule of one company, something that's already causing problems for buyers. One such company, Supermicro Computer, said NVIDIA isn't producing AI chips fast enough for demand, leading to disappointing profits. Number 9, Saudi Aramco. You've heard of Exxon, BP, Shell, the companies that overcharge you at the pump and occasionally experience leaks that kill entire fish populations. Well, they are not the biggest companies in the oil game. That honor goes to Saudi Aramco, an oil company based where else? Saudi Arabia. And let's just say they've had quite the winning streak over the past couple of years, thanks to a perfect storm of factors. Global conflicts disrupted supply lines and sent gas prices through the roof, and Saudi Aramco cashed in big. Their revenues soared to staggering heights, making them the most profitable company in the world. While other companies also did well, ExxonMobil made $56 billion in 2022. Aramco sold $592 billion worth of oil and petrochemicals that same year, making $156 billion in profit. If you're wondering who owns Saudi Aramco, which stands for Saudi Arabian Oil Company, it's a venture between the Kingdom of Saudi Arabia and, well, the Kingdom of Saudi Arabia. The Saudi Arabian government owns a 92% share, while another 8% is owned by a public investment fund, the Sovereign Wealth Fund of Saudi Arabia. So how did Aramco concentrate so much of its wealth? Partly through the tactics of the Crown Prince Mohammed bin Salman, better known as MBS. When MBS came to power in 2018, he held nearly 400 Saudi oil tycoons and members of his own royal family at the Ritz-Carlton for a, quote, interrogation. He alleged that everyone was being held on suspicion of corruption. Then, he politely suggested everyone stop asking questions. The royals and the tycoons wishing to leave this endless interrogation, not to mention the horrendous Ritz-Carlton accommodations, and return to their palaces, eventually pledged loyalty to MBS along with more than $100 billion worth of money. No Saudi oil tycoon has appeared on the Forbes Global Billionaire list since, even though they were permanent fixtures before that. A lot of the profits from Aramco get reinvested back into the kingdom. Saudi Arabia is trying to modernize its image to the outside world, and it's opened itself to tourism for the first time in decades, and it's investing in glamorous new infrastructure and high-tech projects. The most impressive and semi-pointless of these proposed projects has to be Neom. It'll be a futuristic city of 9 million people on the Red Sea coast and built on a 110-mile-long, 600-foot-wide line, imaginatively called The Line. It'll run on AI and renewable energy and include no cars or emissions. Saudi Arabia's increased wealth via Aramco has given it a huge amount of political and diplomatic power to achieve its goals around the world. Number 8. BlackRock. When people think of companies that run the world, especially in the US, they think of infamous conglomerates, perhaps huge banks or media empires. But there are more important and well-hidden companies that maintain majority shares and therefore control of pretty much all of those big conglomerates. The puppet masters of the puppet masters. They're known as the Big Three. Problems with the Big Three running the world are pretty similar, so we'll use each company to explain one of the major issues. Companies like BlackRock. BlackRock operates as a fiduciary, which means that people, for whatever reason, trust the people working there to invest their money. They operate mostly through offering mutual funds in which many investors can pool their money together to buy a portfolio of bonds, stocks, or other investments. So many people have trusted BlackRock with their money that the company now has $11.5 trillion in assets. And if that sounds like an insane amount to you, that's because it is. Here's some context. The US's GDP in 2023 was $27.36 trillion. BlackRock's assets are equal to 42% of that. In fact, BlackRock's assets are equal to more than the total government spending of the world's top 10 wealthiest countries combined. One of the major problems with a company amassing this much money and power is that BlackRock has an oversized influence on corporate decisions in nearly every major industry in the US. The how and the why will surprise you, as we'll soon learn. But BlackRock also works abroad, and not only with other companies, but governments as well. For example, BlackRock was the first ever company to get access to China's bond and stock markets, and then it became the first foreign firm to start a mutual fund business in China. Media outlets hailed this new development in US-Chinese financial cooperation, while people well-versed in the finance industry had just one question. What exactly did BlackRock promise China in return? We doubt Xi Jinping opened up China's market to a powerful American company after years of bans because he was just feeling generous that day. The U.S. House of Representatives had the same question. It didn't like some of the answers they found. They accused BlackRock of heavily investing in, quote, red flag Chinese companies that have been blacklisted by the U.S. These include companies that develop China's military, enable the techno-totalitarian surveillance state of China, and most troublingly, help run forced labor camps in the Uyghur region. These are far from the only accusations against BlackRock. They've also been accused of helping deforest the Amazon. And if BlackRock's financial interests end up conflicting with U.S. national and civilian interests, we somehow doubt the company will pick the welfare of its neighbors over its bottom line. Just like number 7, Vanguard. Vanguard is another of the companies known as the Big Three. The third one's coming up. Vanguard's also a fiduciary with a troubling amount of influence.
I'll tell you the Big Three: BlackRock, Vanguard, and State Street. I know I ruined it for you because I know you were going to go look it up yourself. Good morning, good afternoon. BlackRock, I think, exerts tremendous financial power, obviously, but I think it rivals geopolitical powers around the globe. And it's not American. It's money. It's money. All right, I'm going to go through these because I want to pull up a couple of things, and I'll lose these, I guess. So Darren, Carnegie's Painter, Jeff Grimm, Neely, Shadow Call, NIXX No Movement. You know, that's tough. I mean, things need to happen every day. Number one, you're spoiled. Your generation is spoiled. You need action, 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 action. It's the wrong reason to be in the stock market. This is the end of a 45-year cycle in the markets, 43, 44 years cycle in the markets. The United States made a decision, particularly, I think it started a little bit with Reagan, but the United States politically and in every other way made a decision under President Bill Clinton to financialize itself. We allowed China to enter the World Trade Organization. We passed NAFTA. That was all Bill Clinton. We broke down the barriers between commercial banks and investment banks. Again, Bill Clinton. We allowed the growth of derivatives and et cetera without any regulation at all. The president, the smart one, decided that Wall Street can govern itself. Again, Bill Clinton. And then in the most relevant thing to us, his administration changed the Uniform Commercial Code, Article 8, or at least it happened while he was president, to allow Wall Street to use your securities as Wall Street's collateral for gambling. And all Wall Street owed you was a securities entitlement to a percentage of a pool of assets. This set up the F3 button at Goldman Sachs, and it set up the stock loan desks across Wall Street. Again, Bill Clinton. And then under Barack Obama, not a single bankster was brought before anything, yet we bailed out Goldman Sachs. We changed the risk parameters for Goldman Sachs to FDIC insurance for the boring bank. And then we allowed them to split off all the risk effectively into two areas. One, they created a whole new customer base called hedge funds, to be simplistic. And that's where the trading desks went and the brain power went and the trickery went, but without compliance. And that's also where stock loan went. And two or three guys started lending out everything and turned everything, every asset became financialized, and every asset became a casino chip, which you back up. Because the guys at Goldman Sachs, they're so smart that when they lose money, it's not their fault. They're too big to fail. So you back them up. And that's where we are. And BlackRock took advantage of that. Same with Vanguard and State Street and others. And we now have a system that is so hyper financialized that crypto is on everyone's screen and it trades instantaneously and people, quote unquote, invest in crypto. Trading, day trading is the rule. People want to show you how to count this stock that way and and let you know where it's going. And you are bored because NIXX hasn't moved. Get the hell out of NIXX, Shadow Call. Just get out of it. It's not for you. It's not for you. You need something with movement. I don't know, play tennis. You'll see the ball going back and forth over the net. Hey, Eddie. Did I listen to Jay Powell? No, I didn't. What did he say? I'll find out what he said. More useless crap. I don't see what Powell said. So I guess it'll come across the news wires. It must have been earth-shattering. It must have just rocked the financial world. A rate cut debate is heating up inside the Federal Reserve. A divide is emerging about whether to hold rates steady or start to get more comfortable about cuts this year. I guess that's the essence of his speech. Yeah, that looks like about it. Or he hasn't talked yet. Anyway, it's just debate. It's not worth going over. Did I know that Dubai bankrolls the global foundries chip fabrication in New York State? No, I didn't know that. Dubai, it's unlikely that it's Dubai. It's probably Abu Dhabi. With maybe the company is out of Dubai. Dubai really doesn't have, it's got now very valuable real estate. Oddly, for really highly intelligent city planners, they built it they built it right on the ground. If everyone is so certain the world's oceans are going to rise 50 feet over the next 100 years, why wouldn't you build the city up? But they didn't. So, well, it's a valuable real estate for now. Yeah, still waiting for GBUX. All right, oh, I forgot to sign in. Darn it. Darn it, darn it, darn it. It won't take me long. I just forgot. Should work. Lots of times I screw up. All right, so finger motion is down 20 cents to 281. Like I said yesterday, June 1, I ran out of time. for myself. You can do what you want to do, but I no longer am going to focus or listen to or concentrate on a squeeze for finger motion. Finger, I think, has a fundamental story which can be quite attractive, but currently the CEO, the board, and 8 investors who probably are the best informed guys and girls out there decided the company was worth $250 a share. So that's probably where it's headed, is $250 a share. I believe there was a trade from January/February, which looked like a 2-3x and possibly a 4-5, maybe even a 6x. It looks like what we got was essentially 4.5x, and many people took advantage of it. Many people perhaps made money in calls, perhaps sold calls against their position, maybe sold their position. I don't know. I'm not saying a short squeeze won't happen. I'm just not looking for it anymore. And I'm not going to spend time answering the shills or being accused of being a consultant or being accused of being a pump and dumper. I'm just not interested anymore. So finger motion is, as of June 1, I'm no longer following it for the squeeze story. If you want to follow that, follow Ham. His presence is everywhere on Twitter. He makes calls all the time, and you can play the replays. I am not calling for a squeeze in finger motion. Okay, GBUX 314. It's up. It's in the green. So maybe you're right, David. You're going to be in the doghouse for 3 things. 1, if GBUX doesn't go up and doesn't have a big movement. 2, if NIXX goes up first and GBUX doesn't go up, or if NIXX goes up first and GBUX takes its sweet time, or it only goes up a little bit. So you've got a lot of things I'm going to be annoyed with you about. How I feel about GBUX is I think it'll be close to a miracle if they get the investor to put the money in on the terms agreed. Could they get the money in on different terms? Yes. And could that catch out the shorts? Yes. I think the shorts were trapped starting in December. This is a Ham recommendation, by the way, so if it works, I give all credit to him. And it already gave people a 10x return as a trade. Now it's down 10 cents. I guess they know, they heard me being live. Anyway, yeah, I think it's this week. I personally, unless they move the dividend expiry date or record date, more accurately, unless that gets moved, I don't intend to hold for myself GBUX beyond Thursday, beyond the dividend record date. So maybe it's Friday, whatever the exact date is. But I really don't care about getting the dividend either. In my case, it'll be what, 68 shares? Swell. And then NIXX is down 3 cents at 184. And I think, you know, nothing happened today. But I don't think that means nothing is going to happen. A friend of mine sent me a summary on it, which I don't know I can't find it. Oh, here. From Chris Lecoisier. And he says, NIXX, big updates this week, question mark. AI revenue numbers in April and in May, each month, double the previous month, and bullish guidance was given to double each month here on out to a $30 million revenue run rate. And so he compares this maybe to a GRRR. And but if you're like some people, it's not moving today. So sorry, it's not moving today. But that's pretty amazing revenue growth that's being projected. So it's up to you. You decide. If you're bored, go play around with your money. You'll lose it all, but you won't be bored. Yeah, we'll talk more about NIXX and the others. Hey, Barbara. Hey, Mr. Platinum. I saw a discussion. I got to find out where it was about platinum, and people. There's gangs out there that, for the last 4 years, whoever was running the White House, it wasn't Biden, but remember, Biden and truth go together. Trump and truth are oxymoronic. But we let in, some rumors have it as high, some estimates have it as high as 40 million people through our southern border. We flew them in as well. And for me, the thing that bugs me the most, we didn't test for measles or smallpox or any contagious diseases. We just bring them all in. What didn't happen at Ellis Island. You had a modicum, at least a measure of screening. And then the other thing is there's no testing or training or measurement of people's interest in assimilating into a country with George Washington. Oh, that's right, he's a white guy and he's male, toxic energy. All right, so assimilating into a country with Taylor Swift, because women aren't toxic and she's not toxic. But my point is, a bunch of people coming in, maybe or maybe not interested in the American dream. And I heard a disturbing thing, that the cartels in Mexico own our congressmen and other politicians. What happened in Russia the other day, that took, 18 months to set up, but men came in across our borders from all over the world, just single men, 18 to 24 and older, and many are truck drivers now. What if they're driving lorries over the border from Mexico full of drones from Cuba, China in Cuba? And those drones are going to set up to attack our power plants. Nobody cares. We're just in such la-la land. And I think it's a hell of a price to pay for being stylish. It's a hell of a price to pay. I think we have to bring our troops home from Germany, get the hell out of NATO, put our troops down maybe even invade Mexico. not with the intention of taking it over, but building a buffer zone in Mexico to protect us from the cartels and from insurgencies. But we're not thinking that way. We just think everything goes on here. Men are the problem, and women deserve the jobs, and it's so empowering. I can buy everything online, and it just is delivered. It's amazing the fantasy land we're in. It's just amazing. But we have to live in the world we're in, don't we? And I hope you and I can make money, so whether we live somewhere else or live here, we can be safe. And money, manna being money. Manna being money. Money might not be what you think it is. It might be gold, silver. It's not platinum, although John Platinum wants you to think it is. But platinum comes pretty darn close. And anyway, the thing that I heard is these gangs are stealing catalytic converters for the platinum. There's not much platinum in the world. There's not much silver or gold. It's very rare. All right, well, anyway, let's go down. He talked about robust tools. So a lot of nothing. That's what Akira Nova, that's what I heard he tells his wife when he's trying to woo her into the bedroom. He talks about his robust tool. But so far, she's not buying it. He loves those two words. Yeah, it's called, what's that called? Power of the pulpit, I think it is. But that's what the Fed is known for, is talking its policies. It's worked for a while, but as I've suggested to you, the big thing to watch out for is the bond market. At some point, the bond market won't even care anymore about the Fed, and then we've lost control. Interestingly, though, there's more than one analyst out there calling for interest rates to go lower. And I saw in Jim Rickard's monthly letter that one of the positions he has in his portfolio is something called an ETF. Here it is. It intrigues me. I don't know it. I don't have money. But it intrigues me. Is this the one? May. Let's see it. Oh, here it is. He has the PIMCO 25-year zero coupon ETF. ZROZ. PIMCO 25-year zero coupon ETF. That's about as leveraged as you can get on calling for interest rates to go down. He's lost so far, he's down 8% on that trade, but that can turn around. I like his trade on Apache, APA. They don't call it Apache anymore. That's down 50%. It's trading at 1644. Now, I'm not saying that's going to move quickly, but I think APA, it's down 50%. To me, that means you can make a double. You can go up 100%. That's a really forward-thinking company. It's well managed, and I think eventually that'll be $100 company in our next cycle. But he's down 25% in ConocoPhillips, and that's another excellent company. He's down in Schlumberger, great company. I think and then Marathon Petroleum is flat. That's a good company. I think the oil and gas companies are going to be fine, but it's possible oil goes down before it goes up. How's that for a prediction? Yes, I did hear that. And I've been contacted a little bit, but she doesn't deserve that. But she's other than myself, because I am I'm so far ahead of everyone else. She's the closest, I think, to understanding everything going on. I'm teasing about myself. I think that guy 100%. But one thing that goes on here in these communities is they need us. You all are very powerful as a community, but you break apart, you fracture apart. Cindy Lou Who gets upset at me because I'm blaming it on a dead man. The logic, none, no logic. But, it upsets her because she's loyal to Lou. Well, fine. She can go have a seance with Lou. But I think if she listened to me, I don't think Lou would mind trying to analyze what happened. And but anyway, the reason people come in front of here is because they want eyeballs. They need the money. They want to get you to move so they can steal from you, run it up and down. And in the case of what we refer to as MMTLP, which doesn't exist anymore, there are bounties being paid, as I understand it, for success to keep us from being able to figure out what's going on. GBUX is now in the green, 314. So Anna is at the crossroads of that information, and she's been very, very much a leader. She hasn't been afraid to see where the truth takes her, and it shocks her. It shocks her, and it should shock everyone. I think most people here probably have moved their MMTLP to NextBridge, but there's a lot of people here who think that just because Fidelity, for example, lies and has now named their expired non-existent certificate NextBridge, everything's taken care of. And there are people in the spaces to convince you that's the right way to be. Why? Because they're going to be paid $1 million if they keep the price down. If they get NextBridge to trade, they're in pitching woo to Greg McCabe. And I personally don't trust Johnny Tobacco. I don't know him. He's probably a great guy. But he has a goal that I think is antithetical to success at NextBridge. His goal is to get NextBridge trading on blockchain. Oh, blockchain is the future. They'll have a record of everything. They have a record of everything now. They have a record of everything now. When it starts trading, that gives them a data point to create derivatives off of. And derivatives are like, was it Archimedes? Who was the guy that thought that if you had a big enough leverage, you could move the earth? that guy. That's what derivatives are. And the other thing, and so you can change the price. Well, there's a record of it. Yeah, but the stock's down at a penny. Well, there's a record of it. Okay, great. You got a record of it. Yeah, I think we can't, unfortunately, Greg can't be sure, and these people all sound good. Boy, they have smooth talking voices. Pickleball. I'm still hoping Ham is right on finger. Yeah, I'm not saying he's wrong. Don't read it that way. I'm just personally, I don't have any more time. I think you guys, I think it's an indulgence to spend the next 6 to 9 months, or as few as 3 months, pissing in the wind over a short squeeze or how you're going to get a settlement. I'm telling you, this, if we're lucky, the stock market is going to have one more blow off top. SMH will go to 450. NVIDIA will go to all-time new highs. Everything out there will make, for a brief but shining moment, will make everybody rich and everything glorious again. It could happen by August. It could happen by October. It could happen by January. But when it's over, that is the end of a 2 or 3 generation bull market. And then I believe the markets, this is something standing at the bottom line with a bunch of my former associates. The office is a Morgan Stanley office. And I was bored listening to who's the greatest such and such sportsman of all time. Oh, it's this one. Oh, it's that one. And what about that? Oh, yeah. I'll have another Big Al. We'll have another round. I was bored, so I asked, what if the stock market round tripped? And they turned around. A couple of them looked at me, huh? I said, what if the stock market round tripped? Of course, the market has just done nothing but go straight up since. But that thought that I had, I don't know, 15 years ago, 11 years ago, met with a lot of ridicule. And they went back to talking about football, one of the easily most boring topics in the world, until you get to golf. Or any female sport, women's tennis. I just watched, Djokovic just won. So for him to win the French Open, he needs to beat Zverev. Then he needs to, he's going to have to beat Sinner. And then he'll have to beat Alcaraz. The 3 best, the top men players in the world. Alcaraz, the only person he'll have to beat is whoever's in the final, because he didn't have anybody tough in his half, in the whole half. Sinner will have to just play either Djokovic or Zverev, and then probably Alcaraz. So Djokovic's got a hard hoe to row. But every time I sign in to look at scores, Google immediately lines me up with women's tennis scores, not men's tennis. There's a choice of men's, women's, and doubles. And Google automatically sends me to women's. I don't care about women's tennis, but they need the hits, I guess. They need the hits. You know, and it's not a small thing. Women in tennis earn the same amount as men for some reason, but no one goes to watch female tennis. They have to put women's tennis in between men's, or they put Djokovic late at night so someone will actually watch this 3-set sport before the 5-set sport of men. But you know what? It takes money from younger men. It takes money from younger men. Men's sports carries women's sports. And that's just the fact check. Because no one's interested. I think women's tennis is a little more interesting than women's basketball. But not that much more. Not that much more. I'll tell you what, they're not that interesting to listen to when they talk and analyze the McEnroe. The two McEnroes are the best. All right. So what was my point about that on Finger? My point on Finger is I don't think it's going to squeeze anytime soon. It might squeeze in the future, but I think the stock market is going to be the giant event that's going to change everything. And if you want to still be playing around in the crappy part of the marketplace, that's a choice you make. But I think it's time for everybody here, or just one person here, to focus. I think the single most important thing to do is acquire physical silver. Physical. Single most important thing to do. But there'll be other things to do too. But you got to own silver. And if you're like me, you used to own silver, but you had to liquidate it in futile attempts to keep projects going. So for me, one of my goals is to build up a little bit of a cash kitty. And I won't be able to buy physical silver probably. I'll have to do PSLV in my IRA. But whatever you have, you can start there. And I think 100 ounces of silver, and I think you should buy 70 ounces of silver, 71.5 ounces of silver, in a $100 face bag of junk silver, or as John calls it, constitutional silver, which many people out there, if you tell them constitutional silver, they'll wonder if you just got off the toilet. But constitutional silver is a reference to coins that were issued by the Treasury with a percentage of silver in them. Most of them had a high percentage, but the 50-cent coins had, I can't remember right now, 45% or something like that. But they're priced to adjust for that. But 100 ounces of silver, just use in your mind, I think a very conservative target by 2030, 2032. But I think, number one, I think sooner. And number two, I think it's conservative. But just use a number of 500 as the target in your mind. I think 500 is a good number, maybe 1,000, maybe 2,000, as the wealth creation phase of the price action in silver. The rest will just be trying to keep you up with the value of assets vis-a-vis the collapsing paper currencies. But imagine if you buy a monster box, that's 500 ounces of silver, goes to $500, goes to $1,000. At $1,000, you have $500,000 dollars worth of silver. I think you can trade it in for a very nice house. Probably 7 years from now. Or less, it could be sooner. But you got to get in before everyone is telling you about it. And already everyone's talking about this shit. But it's still early times. Anyway, I think finger is a luxury. I think it's a luxury. If you're wealthy, if you got plenty of time, you have nothing to worry about, spend your time hoping that finger squeezes. But I think the market is more likely to go to 65,000 and then collapse to 5,000 or even 2,500 before his finger squeezes. I haven't been able to watch any of your. Why the dip on finger? Serenity now. Serenity now. Finger announced its annual report. For me, the earnings were come see, come saw. I mean, I didn't expect anything better than what I saw. But you've got a company that doesn't make a profit. Revenues, I don't remember the revenue number, but basically for 3 straight years, you've got a company that has lumpy, not particularly predictable, not particularly reliable, sort of up and down during the year. But you have a company that does 35 million in revenue a year. Management, the board, the CEO, and a group of very knowledgeable investors decided that the value of the company was $2.50 a share. They put money up. They didn't do it at $4. They didn't do it at $5. They didn't do it at $3. They did it at $2.50 a share. Now they're putting up their own money. That's what they determined the company was worth in their mind. The good news is the money does not have any warrants or other derivatives attached to it. So it's good, plain vanilla money, and the company can go about its business. You can see that because when the company raised money with Roth Capital, the price of the stock first was adjusted downward by a third and then kept falling because Roth Capital is a shitty investment bank. They're not an investment bank. They're just a pass-through. They're just bigger than the rest of them. At least in this field of raising money, whatever finger motion is. What the hell is finger motion? Telecom, insurance, automobile assembly, big data. I don't know what category it is. And that I've always said, that's a prerequisite, is that it is something that's easy to explain. But anyway, I expect finger to go to 250 now. The last several weeks, the volume has been really strong. And today, though, I don't know let me look at the volume. 300,000 is still pretty good strength for that company. But I now think just with today's price action, I think finger is going to do what I suspected before, that it'll go to 250. And then finally, the company only raised $2.5 million. For those of you who are astute, you would be correct, I think, in wondering why did they only raise $2.5 million? If that C2 contract's such a big gangbuster thing, don't they need tens of millions of dollars to build that out, ramp it up, and just gobble revenue, cash flow, and profits like Mrs. Pac-Man? But they didn't. So I think fingers going to 250. On the other hand, I don't think it's going back to 1 or 150. So I do think fingers in a position to have meaningfully positive news near term and medium term. And I think if they can execute on the C2 contract, if they can accelerate their execution of the C2 contract, if they get news from one of the insurance companies, if they get a big data client, if they get their revenues start growing meaningfully, you could see finger motion at a much higher price. But finger motion today, or maybe last night, has a market cap of $175 million. They do $35 million in revenue for the entire year, and they don't earn anything. NIXX, a company that's boring and hasn't shown any movement in a handful of days. NIXX, according to what I just read you, it's not my projection, but it's the company's projections. They're going to grow their revenue to 30 or 35 million a month, not a year. And they're profitable. They're already profitable. So profits, as you know, can be manipulated by the accountants. So revenue and cash flow is kind of where I turn my eyeballs, but I don't know. You know, when you have a marketplace, when companies with no earnings can trade magnificently, it's hard to know what to tell you, what metric to look at. But I think finger motion still, it says here, is hard to borrow. The volume tells me somebody's been buying. Is it short covering? There's a rumor that's hitting the Twitters, and I just am not interested in following it anymore, that Ken Griffin is buying calls. Look, Ken Griffin isn't buying calls to speculate, Citadel. This is probably creating synthetic shares or hedging somehow, maybe a short position. It might show that he has some shorts to cover, but you know what? If you want that kind of analysis, follow him. He'll let you know. And he's the best one because a lot of it's over my head. Finger will squeeze. Way too many eyes on it. Yeah, it's possible. I'm not going to be in it. Well, I might be in it if NIXX went and I had enough money. I might buy a little bit, but at the right price. But if Finger were to squeeze this week, I'm not in it. And it's just because I don't have that much money. If Citadel's buying Finger, will they use their algos to push it up? And if Citadel buying shares, are they counterfeit? Golly. Golly, 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 golly. I don't know how to expand your brain. Let me reread just 3 paragraphs or so from Jacob Goldstein's book, Money. I'll give you a little insight. I'll read something different. In 2000, it's the same guy. In 2000, it's Jacob Goldstein. His book is called Money. In 2015, Genghis Khan's army captured what is now Beijing. 45 years later, Genghis Khan's grandson, Kublai, was elected Great Khan. And he took control of the biggest empire in the world. The vast reach of the Mongol Empire was great for trade. Now, the market for Chinese goods extended not just throughout China, but across Asia and beyond. In cottage factories, Chinese artisans carved images of the Madonna and Child for export to Europe. And an especially smooth type of Chinese silk also became popular in Europe. Shiploads of the stuff left from a Chinese port that Arab traders called zaytun, which sounded to British ears like satin, so that's what they called the fabric. The famous Moroccan scholar and traveler Ibn Battuta described Chinese trading ships that had 4 decks and carried 1,000 people each. The Mongols were nomads, and they loved how much easier it was to move paper money than coins. Now, I skipped over that. When they took over this empire, China had already started using paper money. So Kublai Khan inherited paper money. The Mongols were nomads, and they loved how much easier it was to move paper money than metal coins. They understood that speed meant wealth. So the year Kublai became the Great Khan, he created a new kind of paper money to be used across vast swaths of the empire. He called it inaugural treasure exchange voucher, quote unquote. Inaugural treasure exchange voucher. It's not just paper, it's a voucher you can exchange for treasure. Kublai Khan really wanted people to use his new paper money, so he made it illegal to use bronze coins for trade. And the Great Khan's plan worked. Marco Polo wrote, "This paper money is circulated in every part of the Great Khan's dominion, nor dares any person, at the peril of his life, refuse to accept it in payment. All of his subjects receive it without hesitation, because wherever their business may call them, they can dispose of it again in the purchase of merchandise they may require, such as pearls, jewels, gold, or silver. With it, the paper money. In short, every article may be procured. All of His Majesty's armies are paid with this currency, which is to them the same value as if it were gold or silver. Upon these grounds, it may certainly be affirmed that the Great Khan, Khan, not Con, has a more extensive command of treasure than any other sovereign in the universe." Okay, let's go through that, Brian. Let's make a couple of changes. In 1994, the Clinton administration was captured by the banks. And they changed the rules. 45 years later, Joe Biden was president, and every other president. Let's not pick on him because he didn't know what he was doing. And 45 years later, we all are dealing in the biggest market empire in the world. The vast reach of our marketplace, over-the-counter, NASDAQ, New York Stock Exchange, is great for trading stocks and for the banksters. The market for these shares are throughout not just the United States, but Canada, Germany, and worldwide. In cottage factories, ersatz investment bankers like Jeff Easton and Kurt Kramer create images of shares out of thin air for export to Europe. This is called counterfeit. And to most ears, that's the description of what's happening, because most people don't learn anything. The new generation of traders are addicted to their cell phones and their iPads and their computers, and they loved how much easier it was to trade these electronic shares than the physical ones. So the counterfeit shares is what everyone calls them because they don't want to spend any time thinking. But in fact, what was created over the 45 years, starting with Bill Clinton, when Bill Clinton passed a rule that you were entitled as a shareholder not to your shares, but to a securities entitlement. The rules were changed. Any stock under $5 doesn't have research, doesn't have investment banking. The big hordes of stockbrokers, wealth advisors cannot recommend those shares. They are essentially orphaned. This became the feeding ground for theft. But every certificate in the system, possibly with the exception of very few, has to be electronic now. What sounds to Bryant's ears counterfeit, but he doesn't understand it because he doesn't take any time to think. So what Wall Street created was the great electronic stock certificate that shows up on your phone and your computers, and hey, you bought it, you own it. And that's as far as it goes, a securities entitlement. Kublai Khan wanted people to use this new paper money, so he made it illegal to use bronze coins for trade. Wall Street wanted investors to use the electronic shares, so they made it virtually impossible to use physical shares. They made it expensive, time-consuming, and hard to get a fair price, essentially making it, using physical shares, obsolete. So everybody had to use electronic shares. And as long as everyone's using electronic shares, they can dispose of the shares again and again and then purchase additional assets in their account, such as stocks, bonds, crypto. It's a beautiful system. Being able to literally print money is awesome. It's good to be the con. But with great power comes a great desire to print more and more. So Wall Street, being able to literally print new electronic shares, found it awesome. It's good to be the con, C-O-N. But with this great power came a great desire to print more assets under management, more fees, more stock loan fees. So Wall Street resisted for a while, just like Kublai Khan, but eventually the temptation was too strong to bear. Why not just print up a few more shares electronically? We'll get more assets under management, we get more fees, and who'll know? So in this radical experiment that Marco Polo witnessed, money is almost a pure abstraction, backed by nothing. It would be like Wile E. Coyote ran off the cliff, looked down, saw empty space below, and didn't fall. Partly, this is the testament to the sheer power of the Mongol state. Use this paper as money or I'll kill you. But partly, after 300 years of using paper money, people in China had figured out that paper money worked. Not because it was backed by silver or bronze, but because everybody agreed paper could be money. Let's reread that paragraph and do our best with it. This is the radical experiment that Bryant Moore cannot understand. Stocks in retail and institutional accounts are almost pure abstraction, backed by nothing. And then you can use the same idea of the Roadrunner or Wile E. Coyote. Partly, this is a testament to the sheer power of the banks, Wall Street, and the government, because unless you agreed when you opened your account to trade in abstract securities, electronic securities, you couldn't trade. So the power of Wall Street is a big reason that it happens. But after 45 years or more, and certainly after 15 years since the type 1 and type 2 accounts were blurred, and in fact, Wall Street won't hold certificates in safekeeping anymore, mostly. But a lot of this continues because people believe there's a system and there's systems in place. And they've agreed amongst themselves that if they see a black and white entry for certificates in their account, they own certificates. And if they enter an order to sell, they'll get cash. If they enter an order to buy, they'll get more certificates, and they're priced electronically in their computer. So investors in the United States have agreed to accept electronic shares and security entitlements without reservation, because they've figured out that electronic shares work. Not because they're backed by physical shares, not because there's a distinction between physical shares and counterfeit shares, not because you can effing tell who bought physical and who bought counterfeit, but because everyone agreed that electronic shares work. So Brian, you've got to get off this. When you pour sugar in your coffee, and you pour ersatz sugar in your coffee, you stir it all up. What sip of that coffee has real sugar, and what sip of that coffee has fake sugar? You don't know. You don't know. But that's not even a good example. I can't get it through your head. I'll try again, but you've got a head as thick as a block of wood. When you buy stock on Wall Street and you hold it in your account, let's say you're with Fidelity. Fidelity will pool all of the shares of whatever that stock, let's say it's Finger Motion. And at the DTCC, there'll be one omnibus certificate that says Fidelity Securities, 1 million shares of Finger Motion. Obviously, this moves around. It's trued up at the end of every day electronically. There's 1 million shares. But in Fidelity's system, Ken Griffin, institutional or retail, there's 10 million shares. Every single one of those 10 million shares are an entitlement to a percentage of that block of stock, 1 million shares that Fidelity owns in Fidelity's name. Those shares are owned by Fidelity. They're in Fidelity's name, and it's just a for the benefit of quasi-promise that you have any rights at all. Now, it doesn't help how many times I read this, because I got a brain as thick as a brick. I can't comprehend anything. I didn't make it through school. So I got asked the same questions over and over and over and over and over again. But hey, there might be new people here, so they might need to hear it. So there's a movie put out there called The Great Taking. And David Rogers Webb did the research, and he might have written a book. Here is a summary of it. The global financial system has increasingly engaged in a practice where all securities, for example, stocks, bonds, and other financial assets, are used as collateral by the brokerage firms, the world's largest banks. This practice is known as, quote unquote, collateral management. It is carried out without the explicit knowledge of Bryant Moore. It is carried out without the explicit knowledge of individual investors and institutional funds. The financial securities are pooled in a centralized depository like the Depository Trust and Clearing Corporation in the United States. There's a similar thing in Europe. Through this system, securities are rehypothecated, Xeroxed, loaned out, used as collateral over and over again, fraudulently given in return for money over and over again. They are rehypothecated multiple times, creating extensive collateral chains which contribute to the rapid expansion of the derivatives market. Since its establishment, they say in the 70s, because they don't want to blame Bill Clinton, this practice has evolved into a systemic method of leveraging securities for financial gain. This practice was legally formalized through the 1994 revision of Article 8 of the Uniform Commercial Code in the United States. 1994. Clinton, 1992 to 2000. These legal frameworks effectively transfer ownership of securities to central depositories, stripping investors, stripping Bryant Moore, stripping Ken Griffin of direct property rights, and putting Bryant Moore's assets at risk in a market crisis. The 1994 revision of the UCC Article 8 introduced the concept of, quote unquote, securities entitlements, which replaced direct ownership of securities by Bryant Moore and gave Bryant Moore a contractual claim, effectively allowing central depositories to utilize securities at will. Rehypothecation, the practice of reusing Bryant Moore's collateral to secure multiple obligations, lies at the heart of this scheme. When banks engage in derivatives trading, they use Bryant Moore's securities held at the DTCC via Fidelity's one block as collateral without investors' knowledge. Even segregated accounts, which are supposed to be separate from pooled securities, are ultimately included in the same collateral pool. the U.S. Federal Reserve explicitly stated that investors, quote, do not have rights attaching to particular securities in the pool, unquote. Instead, Bryant Moore holds only a pro rata claim to a collective securities pool, the block of stock in Fidelity's name, effectively making Bryant Moore or Ken Griffin the event of insolvency of the brokerage firm or the system. The legal and regulatory structures introduced by Bill Clinton have effectively turned securities ownership, have effectively turned Bryant Moore's ownership of Finger Motion into a form of indirect claim. Rather than having outright ownership, investors are granted Bryant Moore was granted a contractual claim that allowed Fidelity to prioritize Fidelity's own interest when using these assets, when using Bryant Moore's assets. If a major financial crisis were to occur, or just one specific to Fidelity, like when John Corzine ran RFM Financial or RBS Financial, or I can't remember the name of his firm. So if a major financial crisis were to occur, or if there were trouble at Fidelity, the first rights to Bryant Moore's securities would go to the secured creditors involved, like a Goldman Sachs, a BlackRock, involved in derivatives contracts, not to Bryant Moore himself. This legal arrangement, started under Bill Clinton, has allowed the derivatives market to grow to a staggering $1,500 trillion. 1,500 trillions of derivatives based on Bryant Moore's hijacked securities. This explosive growth has been driven by the unregulated Bill Clinton and limitless use of Bryant Moore's securities as collateral. As more institutions become dependent on rehypothecated collateral, as more institutions use Bryant Moore's same collateral over and over again, the financial system becomes increasingly fragile. The failure of a single institution could cause a cascade of defaults. So you want to ask me again if Citadel's buying real shares or fake shares? They're all electronic. The only thing that's happening is the stock loan desk. It's like they have a little knob, a volume knob. They can go from 1 to 11 or higher. So whilst everything looks safe and they're greedy, they can turn that knob up to 7 or 8, even up to 11. And they can allow investors like Bryant Moore to send in money to buy shares of Finger Motion, which are just securities entitlements. This is Bill Clinton. They're not real securities. It's just an electronic entry. It's just an electronic entry. You never buy physical shares. You just buy an electronic entry. So does Ken Griffin. Everybody does. So the stock loan desk just turns that volume up, and they have 11 electronic shares out in the system for each one share that's pooled as a certificate at the DTCC. The physical shares reside at the Depository Trust Corporation. Everything else is an electronic entry. None of the electronic entries represent physical shares. All of the electronic entries represent a securities entitlement. Everything in the brokerage account, thank you very much, Bill Clinton, everything in your securities account, in my securities account, Ken Griffin's securities account, is a contractual claim on a percentage of the collective pool. The pool itself is used as collateral to gamble with. They can create securities entitlements at a ratio of 1 to 1, 11 to 1, 100 to 1, 200 to 1. It's not regulated. Thank you, Bill Clinton. Derivatives are not regulated. Thank you, Bill Clinton. I don't know how to explain it. It's probably my brain that is thick. I just don't know how to explain it to you. There are no physical shares in your account or anybody's account. The physical shares are pooled at the depository trust. Now, you can, of course, you probably don't own MMTLP, but you can see it with MMTLP. When people have been given the opportunity to convert their paper money into gold and silver and copper, they listen to the people on Twitter and say, oh no, I'd rather hold on to my security entitlement. That's worthless. Totally worthless. But there is a real live example of where Wall Street got caught out. The physical shares are at the depository trust, 165 million, but we just sit on our hands, so we can't prove it. Where's the physical proof? There's no proof, because we don't do anything. The fork-tongued fellas on Twitter have convinced you to do nothing. So we can't prove it, and we have these endless questions. Citadel is not buying counterfeit shares. They're not buying physical shares. They're buying securities entitlements. You can call them counterfeit, but it's legal by Bill Clinton. It's legal. Now, where I think there's securities fraud, I think it has to be disclosed. And lack of disclosure is a huge securities fraud issue. I think if particularly women were to complain, this would get changed. There would be disclosure. And I've got all sorts of proscriptions, but I'm just so tired of answering that. It's not, there are not real versus counterfeit shares. I don't know what else to say. I'm not picking on you personally at all. I'm not picking on you personally at all. There you go. Fingers at 256. GBUX is up to 319. Hey, 19. No, we can't dance together. Our government officials are getting bought from the cartel. This is why they don't address. Yeah, I agree, David. And you're in the world. You see it around you. You see the truck drivers. The younger generation is definitely different. As a former educator, I've experienced the change in students' expectations. Students want to be entertained, not just silently listen and learn. Well, that's interesting. I always liked being a student, but a lot of people don't. So I'm not qualified, I don't think, to understand what's best for people to learn. I notice a lot of people in business, in love, in life, you can't tell them anything. You just can't tell them anything. You can't explain it to them. You can't show them. They won't read it. They just have to do it. And they just have to go lose money, or they go lose your money. You can explain it, make your arguments, bring evidence, but at the end of the day, they're going to listen to an ex-boyfriend or a girl that's stupid, and they're going to leave at least $500,000 to $1 million on the table because they don't really have it upstairs to think things through. They just got to go. They just got to, I don't know. What's a knee slapper? What's a knee slapper? I can't remember what I said. Yeah, we are foolish to think. Hey, Colby. Hey, Lou. Hey, Giuseppe. Okay, Brandon Neely. You're not part of the... Who was the outlaw called Neely? What movie was it? Neely. Can't remember. Some outlaw in some movie named Muley. 30,000. All right, I'm going to write that down. I want people to tell me how many shares they have. So far, I have a list of 6 people, and our shares add up to 345,000. So Brandon is our 7th. 30,000. So that gets us close. That's 375,000 shares of Railtown. Consider with President Autopen. Is that how he's going to go down in history? Yeah, it's frightening. It's frightening. Men don't watch women's sports for the sake of the game. Women don't watch women's sports. When Greeley, I'm thinking of Greeley. That's the guy who owned the bar that William Money came in to get Little Bill. I think it was Greeley, not Neely. Yes, let's talk about that in a second. I want to show you some things on Railtown, but I want to get through some of the comments before I go get it, because the comments always disappear once I go there. Go check NIXX price. All right, NIXX price. It's down. It's down. Yeah, so shadow call, you should sell, obviously. The price is down. Obviously, the market knows something you and I don't know. You should get out. Get out. I mean, it's down. It's down. It's beaten down so hard, and it's high volume, and it's in a downtrend. Oh my gosh, we got to get out of NIXX. It's number one, it's not high volume. It's normal volume. And it's down less than 4%. But anyway, shadow call. You got to make your own call. If that bothers you, if what's happening to NIXX bothers you, get the hell out. It's your decision, though. It's not my recommendation. That's good. Jeff, the PSLV is great. Just ignore all finger questions. I could do that, but I still like Finger as a growth company and as a stock. I don't feel like it's going to squeeze. I'm glad I paid off my car loan with Finger shares sold at their peak. Yeah, there you go. That's Jim Cramer said in one of his books or on one of his shows. He probably said did it both places. But he said stocks are just pieces of paper. Until you sell, you don't have the money. So you did the right thing. And also, you have to take profits. This guy's talking about gold stocks, but let me see if I can find his quote. Date, don't marry. I said that once. Don't fall in love. If you fall in love, you're a cheerleader, not an investor looking to increase net worth. Yeah, I can't find the quote, but it's basically you have to sell, you have to book profits, you have to take profits. And here, when I say don't be afraid to sell, I mean you have to be willing sometimes to take a loss. That's inevitable. Okay. Take profits no matter what the gain, big or small. Sell at least a portion of your investment. That's when, when it starts to run. He's talking about gold mines, so when they pour gold. So it's a little tricky to translate it into our stock, but he says, take your profits. This is how you grow your portfolio. Anyway, we've made that mistake not taking profits. You see how smart I was with GBUX? It's green today. I'm a genius. PS 71. Hey, GBUX is the play. With RGC and SBET recently ripping, investors are looking for the next one. I'm holding you to your promotion. You're a promoter. You're a consultant. You're a pump and dumper. I'm going to hold you to it. I'm coming after you if I lose on my 681 shares. Yeah, I've only got 60 people. I'm, I don't know why I do it. I guess I've chased my audience away. That's all right. You don't have to approve. You don't have to thumbs up. You don't have to do anything. Go listen to other people. Eventually, I will do something else. Mike says, GBUX, if it breaks, hold your hats. Don't sleep on GBUX. Where's the bottom on finger? Boy, did I just lose 40,000? I don't care. If you lost 40, I don't know your name. I think you're a shill. But if you lost 40,000, I don't know how many shares you have. And the stock was 510, and you had 2 weeks to sell it above 4, or maybe only a week, but you had many days to sell it above 4. If you're still on it, yeah, you lost money. And if you want to still hold it, all you're going to lose is time, and it'll probably eventually do very well. I think Finger Motion has a good team and a good strategy, but Ernest, I can't help you. I don't think I could have been clearer, and I'm not going to go back for it. Are you saying that derivatives can't be changed from the Clinton administration? I don't know what that question means. Derivatives have changed. They've expanded. These guys, it's always distract over here and incrementally claim more securities trading ground. That's how they operate. So derivatives have gotten massively more complex, more leveraged. since Bill Clinton. So they've changed from the Clinton administration. But it was Bill Clinton, and I know he's great and he's honest, and the Democrats are heaven. But Bill Clinton made it possible for Wall Street to create and trade derivatives without regulation, without oversight. That'd be one thing if, when there was the great financial crisis, that the flip side of it was that Goldman Sachs went out of business when it got in trouble. Instead, Goldman Sachs came to the taxpayer and said, hey, we're in trouble. We're too big to fail when we're geniuses, and we deserve our younger wives and our BMWs and our yachts and our summering in the Hamptons and our graduate schools for our children. We deserve it all. So the taxpayer better bail us out. Well, if you're not regulated, take your lumps. Don't come to the government to be bailed out. If you don't want to be regulated, pay the cost. Why is finger down so much? On top of the system where the stock loan desk and your broker dealers and everyone can look the other way, so that the dial can go to 11 or it can go to 20 or it can go to 50. In other words, by not demanding delivery, not asking for delivery, by accepting orders to sell stock without locating the shares, which is all illegal. On the other hand, you can locate shares, you can borrow them, and that can expand the number of shares outstanding, and that can be done legally because of Bill Clinton's changes. And others, other people were president and have done nothing. Wall Street owns the government. BlackRock owns the government, including Donald Trump, probably. At least he's probably not going to do much against Fink. Not when Adelson's widow gave him $100 million to push forward the causes that Benjamin Netanyahu stands for. But I don't know. Can't make those connections. It's not, you're not allowed to. So why is finger down so much? Because there are day traders, there are funds committed to short selling, there are offshore sellers of shares. There is probably a very large, I would say that Ham's correct, 250 million shares which have been sold of Finger, which have never been delivered. And the stock ran up to 5. They want to get, if there were margin calls, they want to get those down. So they sell the stock down. People can only buy one share for $1. Institutions can sell 20 shares for one share. I don't know. Why do you think the stock is down? I think I don't know. The volume is very strong on Finger. It's 500,000 shares. So there might be something going on in the background that's going to surprise us all. I don't know what it is. But if I had to guess, clients of Roth Capital shorted this stock, and other opportunistic day traders shorted this stock. And as it ran up, they continued to short. And as it ran up, they continued to short. And as it ran up, they continued to short, increasing their average price received. And as it goes down, they're selling. And the question is, are they covering? Or are they going to be more greedy? I don't know that. You need to write to Ann Wagner. She stands against having a consolidated audited trail, so no one knows for sure. No one knows for sure what goes on. I don't think there's any news. Finger Motion raised money at $2.50. My experience is, unless there's an event or some brilliant investment that the money's used for, stocks always go. The big whales figure they're getting a discount, and the board goes along with it. They're just pricing their stock. They're pricing their company. That's why I think it's at 260, 259. They did the deal at $2.50 a share. That's what it's worth, according to 8 of the most knowledgeable investors and the company. So that's probably why it's drifting down. But Gordon, Finger Motion is a highly manipulated stock. There are a huge amount of what we call naked short sellers. There's probably real short sellers. They can keep selling. They have almost, in many cases, almost unlimited balance sheets because nobody is looking. We can only buy one time. And Finger Motion started the year at I don't know, $1, roughly $1. It ran to 5.10. You can fill in the blank, profit taking, but you can also assume that the people that got caught short at $1.50, $1.25, and $1, as it went up, they kept shorting. And now they may try to put pressure on it, but you're asking me to guess and create a narrative that's impossible to know. Impossible. I don't know where all this volume's coming from. I do think there's buyers in there, but people can only buy once. Even if they have $10 million, they can only spend $10 million once on stocks that are not marginable. That's all they can do. Because of Reg Show, there's no stopping the selling. I'm here for the Rastafari. As for MMTLP, there is no fraud until the rightful claimants to NextBridge submit claim to their shares. Yeah, I agree with you. But everyone listens to Double D, and there is a Double D on Twitter. You know who I'm talking about. And it's not just he. There's a group of them. But he's the moving force that argues that you don't have to do anything. Well, that's just really bad advice at best. And it's nearly criminal at worst. But he'll probably say he's not giving you advice and you do what you want to do. Well, if you want to keep your shares as MMTLP or as in your account and they say for NextBridge on them, You're just aiding the criminal system. That's all you're doing. And until the 165 million shares are spoken for at the transfer agent, we never have proof. So it's just circular discussion over and over and over again. And I'm just tired of it. I'm tired of it. I'm tired of being accused of doing things that are wrong. And I'm tired. I've got 60 people listening. You know, I used to have 400, 800. I guess I pissed everyone off. But, you know, it's really tiring. Marty has 10,000. All right. We're up to 8 people. Marty party. 10,000. So we're up to 8 people, and we're basically at 400,000. We're just below 400,000. Babcock, let's see. Wow, that gets us much higher. Let me see if I already have you here. I don't. All right, Babcock family. That's exciting. That's exciting, Babcock family. 44,215. So I'll have to get a running total of where we are. We are $429,000 shares. Pretty awesome. Pretty awesome. I wish we were at 1 million shares. Oh, account settings. I already have accounts. Oh, he's up. Now you have 20,630. All right. So I have to add about 3,000. So we're definitely 430. We're basically 435,000 shares so far. That's great. Account setting. Who owns this shithole? You, fat man. I own it. I bought it from Neely, I think it was. I paid $1,000. You better clear on out. You just shot an unarmed man. Well, he should have armed himself if he's going to decorate his saloon with my friend. All right, Bob S. All right. Wow, Bob, we might get there with Bob S. 136 250. So we're over 500,000 for sure. Bill Miko. All right, we're getting there. But I might already have you down. Let me look. No, I don't. Okay. $100K, and you might buy 50 more. All right. Well, this is a cowardly Son of a bitch. He's got one shot left. As soon as he fires, shoot him down like the mangy dog he is. You be William Money. You kill women and children. I reckon I've killed everything that's walked or crawled. But I'm here to kill you, little Bill. I have not heard anything related to NBH. Should I worry? If you're inclined to worry, worry. There's not much you can do. The only thing you can do, there's two things you can do. Transfer your shares from your brokerage firm to Equinity and get shares of NextBridge, whether you get them at home or at the agent. Either way, they'll be at the agent. They'll be taken out of the electronic system. It's one thing you can do. You can go to NextBridge and sign up for their notification, give them your email, and you'll know what's going on. And if you want to get involved, write your congressman or write the SEC. But that's all you can do. Otherwise, you can't worry. You can't worry. I do not believe there will be a settlement to make people whole in MMTLP. I don't think that'll happen. I do think there is securities fraud and other malfeasance. So eventually, attorneys like Wes Christian will win, I think. But it could take 8 years. And by that time, silver will already be 5,000, and you'll have missed out on what you should be focusing on. I think you have to write it off in your head and just get on about your day. That's how I've had to look at it. The criminals have won with MMTLP, but they're trapped. So it's an interesting stalemate. But as long as we don't move our shares and listen to Double D, we're helping the criminals. And we can't help ourselves. We think the systems are in place. Double D sounds so intelligent and he's so concerned. And why would he put all this work in if he didn't care about us? And the people laughing every time he says something clever or ridicules William on Christmas Day. He's just great. So we don't move our shares. We like playing the victim. We like thinking that someone's going to come rescue us. Nobody's coming to rescue us in MMTLP. They already made their decisions. There's enough there that the lawyers are going to tie it up forever. And the lawyers are the exact same. The lawyers represent the criminals. They represent normal people, and they represent the SEC. It's the same law firm. You're not going to get anywhere with MMTLP. The only chance you have to make your money back, and I think it's a good chance, a very good chance. It might take 7 years, but I think it's to own NextBridge. There's risk. There's risk. But one of the worst risks is self-inflicted. There's still 50 to 90 million shares unaccounted for. And that's our own goal. That's our own goal. We're making that mistake. GBUX is moving. GBUX Alula, you're my baby. GBUX Alula. I don't mean maybe. So if you're registered, you don't have anything to worry about. I don't think. You may still end up with zero, but if you're registered and a lawsuit wins, unless it's a small amount of money, you'll be notified and you'll be contacted. If there's movement in NextBridge, it's tough though. NextBridge is having a hard time. The criminals threatened employees and they said, I'm out of here. Mostly the women got out of there. I don't blame it. Women look at things differently than men, which is fine. That's why we work together, right? It's just different. It's just different. I mean, wouldn't it be a boring world if everyone thought like men do? Well, hello there. How am I doing? Well, I guess I'm doing fine. Definitely take profits. I messed up. 240 June calls at 15 cents went over 200 or $2, now worth 27.5. Didn't sell because Ham saying buy and got greedy. I don't know what to tell you. I don't think you should hold those. But I can't give you advice. You got to do what you got to do. But even at 27.5 cents, I would get out of those but as soon as I tell you that, the stock will go up. But I think it's very likely the stock closes at 250 or even $3 in 3 weeks, and then you have nothing. The bid's going to disappear. But anyway, I don't know. I don't want to give you advice because as soon as I say that, it'll run. But you could get out of them and you'd still have a double. No, not a double. You'd be up 60%. But then you could buy, if you still want to be in the finger story, buy some of the $4 ones or the $5 ones for next to nothing and get the rest of the money into your pocket. I mean, 240 calls at 25 cents. It's all time premium. You don't see that, do you? It's all premium. It's all air. But if you sold them at 25 cents, you bring in $6,000, right? At least you bring in the 6,000. But if you wait, you're not even going to have that. Personally, if I brought in $6,000 and you still wanted to be in that position, I tell you what, if I could sell those calls right now, Brandon Neely, who owns this shithole? I would sell those right now and I'd go buy 10,000 shares of Railtown. You could buy probably over 10,000, but I'd buy 10,000 shares of Railtown. And I'd put if you want to be in finger calls, buy if you got $6,000, buy 10,000 shares of Railtown. That'll leave you $2,000. Spend $1,000 on June calls and keep $1,000 in cash. And when the June calls expire worthless, wait till Monday afterward and buy the July calls and see what happens. But I don't think you should be chasing finger with calls right now. If I had $6,000, see, some people like GBUX, but I would put, I'd buy at least 10,000, if not 15,000, 12,500 of Railtown. And then I'd buy some NIXX and I'd buy some GBUX. Why would I buy NIXX and GBUX? I'd buy NIXX over GBUX, by the way, if you want to just pick one. But I'd buy a little GBUX, a little NIXX, because if they go up, I'd take my profits and I'd buy more Railtown. But I would act on Railtown today. Brandon, I can't give you financial advice, but I can tell you your premium on those calls is all time premium. It will disappear. And you're hurting because it was worth $2 or whatever it was. And now it's worth more than you paid for. Hear this pounding? I don't want to ruin my microphone, but I'm pounding on the table. I think you should convert that highly ephemeral, wasting, disappearing asset of $6,000. Go directly to Railtown. You can skip NIXX and skip GBUX. Just buy Railtown. 6,000 divided by 38 cents. You could buy 15,000 shares of Railtown, more, but let's call it 15,000. Now I'm going to give you my projection. It's just a projection. I'll do it again for those who are here. I'll do it again. I can't. I get a better setup. Okay, fuck it. I don't know if you heard me. I didn't mean to swear, but my microphone isn't working. All right, so here's Railtown, Brandon. Who owns this shithole? Here's Railtown. They raised some money the other day. So they have 20 million shares. Railtown has 20 million shares. They had news this morning. I'm not able to get to it yet because I'm trying to get through all of these. It's my own fault. I'm not complaining. So, in my opinion, we're finally seeing news on Railtown. And the last trade on Railtown, and I don't think we're going to see one bit of news. I think we're going to see repetitive news. Railtown, the ask price right now is 37 cents. Wow. 0.3699. So you could buy 16,000 shares. All right. Now, Railtown, here's my miniature chart. Approximately 5 years, I don't know how long, but something like that. 5 years and tens of millions of dollars were spent in the R&D phase. So the value was down flat on its ass. But now, last November or October, they got out of R&D and they have product to sell. And my original idea is, I don't know, Microsoft would buy them. They're AI, they address a real market, and they're first to market with this proprietary platform. So I figured they'd sell out, somewhere up the value curve. But in the meantime, they met this company, AI Partners Corporation, and they bought it. They liked the shape so much they bought it. Well, there was information on Twitter that AI Partners, a agglomeration of 160 AI companies, collectively was doing 400 million in revenue already. $400 million. Well, they also said that their modus operandi was to roll these companies up, sort of like, I don't know, the mothership. So if we use, instead of 400 million, 250 million, so I'm discounting it by a third. I'm only using 2/3 of the 400 million that was on Twitter. I kept a picture of it. I'm not going to show you because the person that put it up deleted it. But I have it, that was the projection. So 250 million in revenue. The buyout multiple in AI is 19 times revenue. 19 times revenue. So if we take 250 million and we multiply it by 19, we get 4.75 billion as a buyout target. Over time, because we don't know how long it'll take to bring all these companies up to the mothership. But we get 4.75 billion buyout target for Railtown eventually, or just a valuation of that, because that's the multiple that admittedly, this is all envelope talking, back of the envelope. I trust the guy who gave me that multiple. I've heard of higher multiples. And I think when one of the AI companies did a secondary or did a spinoff, I can't remember the multiple, but it was in that range. Maybe it was 20 times instead of 30, 40 times. They got 26. Anyway, it was higher to my memory than this. So anyway, we'll use that. Now, we'll divide it by 20 million shares outstanding. So we'll divide that by 20 million shares outstanding. We don't know how many shares they'll end up having. We can't know. But that's a valuation of $237 per share. And of course, that's ridiculous. But let's use it, $237.50. And let's start risking it. So we took 4.75 billion. We divided it by 20 million shares outstanding. let's just take a third of that. So we'll discount it by 2/3. For all of the unknowns, that comes to $79 a share. And you know what? Let's discount that. Let's discount that by 2/3 as well. So we'll take a third of that. That comes out to $26 a share. So I reduced the revenue. Then I reduced the big number to a third of that number. And then I took that number and I reduced that to a third. And now we're at $26 a share as a target for Railtown, but over time, we don't know. So why don't we present value $26? What would be a good way of doing that? I don't know. You can almost use anything. Why don't we just take a quarter of that number? That gives us $6.58. And now, why don't we just divide that number in half? I'm discounting it so much. That comes up with a number of $3.29 per share. $3.29 per share. They just issued more shares. So $3.29 is my target. So let's call it $3.25. It was $3.50, but they just issued more shares. So let's call it $3.25. And let's say you buy 16,000 shares. I think you could have $52,000 this summer. Am I being too aggressive? Maybe. But you can chop that down if you want. You can chop that down. But Railtown is not time premium. Railtown is not going to expire. Now you could buy finger shares, but I don't think finger shares are going to do anything in the next 6 weeks. I think it's going to take time for it to recover. I could be wrong on that too. It's all probability. But I think if you take your $6,000 by 16,000 Railtown, you can make 50 grand. Well, you'll make 45 grand, but you'll have $52,000 sometime this summer, I think, in Railtown. If that appeals to you, now's the time to act. If it doesn't appeal, just hold on to your options and watch them expire worthless. I forget your question, Ernest. I haven't lost any money, but I could have cashed out a lot. My fault. I think I just gave you a way to cash out. If you had 240 times 2, that's the same amount of money. I'm giving you an idea that at least gives you the chance to make the amount of money that you missed out on. Railtown, RLAIF, RLAIF. Reverse what Clinton did? No one understands it. Everyone loves Clinton. He's so smart. Why finger down a lot? Thank you for your well-written English. Finger went from $1 to $5, and they came out with an annual report that didn't say anything, and they only raised $2.5 million. So that either means that the C2 contract isn't as big as they say, or that something else is going on. It does mean that the C2 contract will be developed over a longer period of time, exposing them to competition. So you're talking about the local train instead of the express train, maybe. But there's not enough information in the annual report. There was no management discussion to speak of. So we got to wait. There's no big news. The stock ran to 5. That's 5x. And now it's pulled back 50%. It's a normal pullback. Also, there are short sellers, real and aggressive, and they could be shorting it. There are criminals in finger motion. But what is finger motion worth, Gordon Mack, in your opinion? Do you have an idea of it? I don't. I don't know. I don't know what finger does. Is it a telecom? Is it an insurance reinsurer? Is it big data? Or is it all three? That's fine. It's all three. Or is it an automobile SUV fabricator? They're all good. It's all good. But what category do I put it in? I don't know. That's what I'm saying. What multiple do I use against revenues? They have annual revenues of approximately 35 million for the last 3 years, and they make no money. What multiple should I use against those revenues, Gordon? I don't know. You tell me. I have no idea. But right now, the stock is trading at 175 million. So the is it the appropriate metric? I have no idea. The stock right now is trading for 5 times its revenue. Is that a fair metric? I don't know. But you should have in your head what you think it is. They have no profits, so you can't give a multiple there. I'm not sure they have cash flow, net cash flow. I don't know. I don't know how their accounting's done. But I do know revenue. They have revenue. They trade at 5 times revenue. Personally, I think that's a pretty good valuation for Finger. That's the fundamental side. The short squeeze side is a different ball game. And I now believe the only way companies squeeze is if there's an organized long attack. Is there one here? I don't know. I don't know. I don't know. I don't know. Is it over? I mean, for the last 3 weeks or so, I don't know who you're listening to. I've been saying sell calls, sell some stock, take your profits. And I think Ham's been saying that too, but not, I think Ham's been saying it differently. He's saying take your profits and then go buy cheaper calls and get your original money off the table so you're betting for free. I personally think there's no short squeeze coming in finger motion in the next, pick a time frame. So here's where I am, Gordon. And it's already too late. I've got 60 people listening to me. Half of them hate me. 10% are here to make fun of me. I don't have much of a following. But I think the stock, and you don't care about the stock market. All you care about is finger. I get that. But I think the stock markets, the indices, are going to skyrocket to blow off tops. Why do I think that? Because that's what happened in Weimar Republic. And it's what people have talked about for years. I think we're finally at the end of a secular bull market that lasts the lifetime of the baby boomers as investors. And it's going to be over. And the baby boomers, some of the older baby boomers, remember when their parents talked about the Great Depression. But a lot of the middle and younger baby boomers have no memory of the Great Depression. But that's what I think's coming. Not right away, but I think the blow off top will be vertical. So it could happen in 2 weeks. It could happen in 2 months. It could happen in 2 quarters. But this is it. I don't want to spend my last opportunity in this bull market to get ready for what's coming on finger motion. You might. I think it's a luxury. I've been following finger motion for 4 years. I made some money and then I lost everything in finger motion. I'm not complaining. But for me personally, yes, it's over. I'm done on the short squeeze story. On the fundamental story, if I make some money, I'm more than willing to come back to finger motion at the right price. But you don't listen to me anyway, so why are you asking me? Did you sell any of your calls at a profit? Did you sell any calls against your stock? Did you take any profit off the table? No? Well, you didn't listen to me, so why are you asking? You're not going to listen now either. If you want to make some money over the next 2 months, I think you should buy Railtown. Here's my simple thesis. I could be wrong, by the way. It's risky. I could be wrong. Simple thesis. Railtown was an R&D company. It's now a production company. It's going to go from a de minimis value to having a new price. I don't know what that new price is. I could come up with $20, $30 a share, but I'm trying to adjust for all sorts of unknowns. And I came up with $3.25 just now. I chopped it. Am I right? Who knows? Maybe it only goes to $1.25, but it's trading at 40 cents right now. I think you could take some of your finger or all of your finger and buy Railtown, and I think you get a 10x potentially. Well, now it's not 10. It's not 10x anymore. It's 8x. 8x. But it could go 10x. That's not over, and that's not a short squeeze play. That's just a fundamental revaluation. But it doesn't have Ham. Ham's not out there talking about it. And that's bad, actually, because Ham has a lot of power to bring people in. I think Ham understands the short situation in finger, and I think if you ask Ham, finger is going to go massively higher in a short squeeze. But unless you have your own story that you can compare price action to, your own thesis, you're going to ask idiotic questions like this. Is it over? If you were listening to me, I was telling you to take profits. But you didn't listen to me. So now you're saying, is it over? Do you do your own thought process? It's your responsibility to do your own thought process. If you believe finger motion is in the middle of a short squeeze, then this pullback is a buying opportunity. Short squeeze is different than a fundamental story, or it could be both. Personally, I didn't find the annual report all that appealing. I didn't find it bad. I didn't think it was bad. But Gordon, you're asking me, I'll tell you. Ironically, I would have liked it better if Finger Motion had raised $25 million, because that would have given me confidence that that C2 contract is kick-ass. Now I've got to sit back and wonder what's going on. I don't have any information. I do understand Railtown, but Ham isn't going to talk about Railtown. So, and not yet anyway. Probably never. Why? Because how do you follow a short position in it? The key thesis that Ham has is that he's been following Finger Motion for several years now, and he knows the size of the short position. If you buy into that thesis, which I have, once the stock starts trading up and it catches, it can rocket much higher. And it's done that before. I've followed it. I've traded it. But for me, Finger Motion this year has already had its trade. 5x if you were lucky, but probably 4x more reasonably. 4x is a hell of a trade. So for me, Finger, the easy trade's already been done this year. Now I have to wait on news. And when is news going to come? I don't know. Meantime, what the hell? You don't want to hear about Railtown, so I'm not going to go through it again. I think Finger is down due to lack of enforcing the rules. Yeah. It's a shithole. Who owns this shithole? Railtown is down. Finger is down. GBUX is up. NIXX is down. And DJT is down. Everything is down except GBUX. Everything is down except GBUX. Now remember, Ham gave the idea of GBUX, and it already made 10x for people. And now, so, you know, that's another place you could go with your Finger shares. You can go to NIXX. Those are the two I think have a chance. But GBUX, I think, is a very, for me, it's just these 3 days, and it's risky. But if it happens, it could be exciting. I think NIXX gives you 5x, Neely. But or what's your name? The guy that asks if it's over. But I think Finger's flat. I think Finger might go up 50 cents. All right. Steve Mertz, 1,000. All right. We're getting there. We have 12 participants in Railtown. No Finger earnings yet? Yes. They released their annual report. You can find it online. And they lost 9 cents a share for the year. 9 cents. 9 cents is not a reflection of operating losses per se. They raised money in December in their fourth quarter, and there were expenses associated with that. And I would think that that was a large part of their losses. But when I read the breakdown of costs and revenues and all that, it kind of all was sort of the same. There were a couple of obviously bigger entries than the past, but it wasn't anything, particularly if you take into account the cost of raising money. Now, there is an entry there, and I think Tony DeNaro pointed it out, of accounts receivable that's pretty high. I didn't, I don't quite remember it right now. And I'm told that it's been out for over a year. I didn't study it, so I don't know. But I do think it brings into question, why would finger motion have such a high outstanding accounts receivable when the people that owe them money are telecoms, China telecoms, and I've got to think through the minutes. If you buy minutes from the government, that is a cost. But maybe when you buy them, the difference between what you're going to sell them for on the top up websites, maybe you book that in the accounting system they use, because you're going to sell the minutes, and maybe that's the accounts receivable, or maybe the accounts receivable was just that day. I just don't know. I'm not involved in their numbers. I wish you could bring him back on. He does give sometime a hope. And I'm not a shell. I like listening to you, but I also like listening to him. Yeah, if you want to listen to him, Kristen, Shaughnessy, Giannis have space calls with him. I think he has 2 a day. You can go to space. You can search finger. You can find ham short killer, ham at shorts, ham with shorts. Shorts are ham, shorts are us, whatever it is, you'll see him. And you can click the play button and you can listen to his call. Wow, Steve. Hey, we're going to get over. Let me see if I already have Steve down here. I might already have Steve. No, I don't. Okay, so number 13, Steve, 212,500. I like that number. That's what I would do. You pissed me off, but I keep coming back for more. Well, Lou, when you say that Trump is not truthful, I don't think you make any sense. It means that you believe that Biden is truthful, that you follow CNN. So, it's not opinion. I don't think. Have you ever listened to an entire speech by Trump? He doesn't lie. He does. He's a carny. He's a carnival showman. So he exaggerates. He says nobody's ever seen anything like this. You can't prove that one way or the other. But on the issues, he doesn't lie. Joe Biden lies. If he knows what he's saying at all. Bill Clinton lied. Barack Obama lied. I think. I voted for him twice. But, I just disagree with you, and I don't think it's opinion. I've listened to Trump so many times. I don't think he lies. Everybody tells a fib now and then, I suppose. But Trump isn't corrupt. Joe Biden sold access to the United States government for billions of dollars. His brother, his son, and others got rich. That's corruption. Trump hasn't done that. Oh, yes, he has. CNN says when he sells rooms to Trump Hotel, he's corrupt. Well, go listen to CNN. I don't want to argue about it anymore. Eastwood side, I know that. Yes, I did, Big JR. I added your 250, your collective audience there. Benjamin, I have. Oh, you're going to move to Railtown. Okay. Investors on Twitter are claiming JP Morgan maybe, has pulled the buy button in GBUX. Ah, very good. There goes GBUX. Are you guys kidding me? 331. See, I told you, I'm pretty smart on GBUX. I paid 279. So who's better than me? There goes GBUX. I sold 190 of my finger calls, kept 50. Added 8. Okay, good. All right, you bought GBUX. At least that's fine. And you bought 4,500 Railtown. Good. I'm going to add you down. Neely. Oh, no, I already put you down. So Neely is now 34.5. Who owns this shithole? 344 GBUX. GBUX over 10%. GBUX. Remember, that is a ham recommendation or, idea. Beard growth looks good. I'm going to shave it, but I just, all right, when I get to the bottom here, I got some things to show you, then I'm going to sign off. Finger is a long-term hold instead of a squeeze. It's up to you. If you believe the squeeze story, you trade it for a squeeze story. I believe finger I don't know if finger's a long-term hold. I don't think I would hold it long-term. I'd rather have that money in an oil and gas stock or a miner or in silver. I don't know why you got into finger. Are you in finger because you're a trader? You were speculating? Personally, Wall Street Wolfie, you haven't listened. Two Mondays ago, Railtown was 22 cents. Today it's 38 cents. But I'm not trying to get you out of finger motion. I think I'm fairly consistent. My time frame, sort of January, February, I thought finger could double or triple, maybe give you 4 or 5x, maybe even go to 6 or 7. Well, it went to 5. And I said, what we have to wait for is the annual report. The annual report came out. I didn't see anything that exciting. So, do I have to repeat myself? I think the backdrop of the stock market is it's going to fold away before you. I think there's 2 months to 9 months ahead of us of the last illusion of the 45-year bull market, 43-year bull market. And then it's over. Now, in that environment, you won't be investing in a stock market, you'll be investing in stocks and maybe finger motion will kick ass. But I think what's going to happen is everything's going to collapse. But it's first everything goes up, and maybe finger goes up with it as well. But Wall Street Wolfie, I tried 3 or 4 times with finger, and I ended up with nothing. It's not anybody's fault. It's mine. I went down and did the Time Life video. But I can't do it anymore for the squeeze. You're fixated on it. Listen to him. He is compelling. I believe him, and I believe that his numbers are the numbers that he's added up for ever, and a squeeze could happen. If you believe that, stay in it. But I don't know why when GBUX, look, let me tell you what these guys are saying, even though I'm taking credit for it. GBUX is a very small float with a large short position, and potentially these guys from offshore are raising $200 million for 30% of the company. I don't know how they're going to get that deal done when the market cap is 300 million. But all right, maybe they get it done, or maybe it's adjusted. Reportedly, they're not going to dilute the shares, or not by very much. So if they get that done, it's possible you have a short squeeze in GBUX. My opinion why it works, because the shorts got trapped recently, and it sounds like there's longs kind of engineering, creating the story, working together, and they're not raising money from Lind Partners or the Toad. So it's got as good a shot as any. Now they have a deadline of the dividend on Thursday. They might extend that. If they extend it, I don't know if I'm going to stay. If they don't extend it, then they have a chance of getting this deal accomplished, and you might see something happen. I don't think I'm going to be in GBUX beyond Thursday. I think whatever happens, I'm going to get it over into Railtown. Unless Railtown's already gone to $1 by then I'm kind of stuck. I'm going to say, shoot, I missed out. But that's, you can't get everything correct. But you don't want to go into Railtown. You want to stick with finger, because to you, the only way to make money is in the stock you bought. And if the stock is down, I've got to make sure it goes green. Otherwise, I'm losing. So anyway, stick to that theory. Stick to that theory. I can't help you. But GBUX, I think if it breaks out, it's obviously going to double. But I think if it gets above, I'm trying to remember the numbers. Oh, I didn't see a chart on it. I didn't see a chart on it because the service I have doesn't give me a chart. But the stock's high on the year is 10. If it breaks out of 10, who knows where it could go? Ham thinks it could go to very high numbers. So that's GBUX. You could do that. NIXX, I think, at $2, could go to 10, that's 5x. But maybe it only goes to 6, that's 3x. I think NIXX is getting ready to do that, and there's very little downside. But why should I tell you about those? You're only interested in finger. It's okay. I think finger has a good fundamental story. It's got a lot of pieces out there that are exciting, and it's got a huge fail to deliver. If anything ever triggers that fail to deliver, that stock could kick ass. But has anything done it? The last time it went to 9, Lou, oh my God, you're blaming a dead man. No, I'm not. Lou was hired by the criminals. I don't know if Lou knew it. It might just be that the CEO at COSM was bribed by the criminals. But he might not have known it. I don't know. He wanted 35 million. All they had to say is, you know what? Work with Lou, work with Frank, get this done, get the stock price up, and we'll do a deal. That's what happened. I'm not blaming anybody, but the criminals stopped the squeeze that I think was happening in finger motion. And I'm not including Lou as the criminal. I'm just saying that's what happened. This time, when the stock starts going up, do you think they're going to try something else? My guess is they will. Do you want to wait again and again and again in finger motion because it's going to go to the moon? Sure. All right. That's your choice. That's your choice. I don't know what the F I'm talking about with finger. Ham does. I don't. But in my opinion, in front of you, there's at least two stories, maybe three. There's Railtown, NIXX, and Ham Story GBUX that have more urgency and more oomph right now. So if you can stand it, try a little tenderness. Was it over when the Germans bombed Pearl Harbor? Is that from John Belushi? I at least have one. I at least have two. Red Pepperoni has 2,500 rail. Okay. So we have 14, at least 14 participants. $2,500. So I have to add this up. We might get close to 750. I'm contemplating on Railtown, but I worry that about the price. And if they do why would they do a reverse split? Why? I know what you're thinking. You're thinking it has to be $1. I guess that's what you're thinking. Let me go back through it one more time. My thinking, Gerald. This is my thinking. And I need a bigger boat. Railtown has been for several years developing its software. It's called large learning module or something, whatever, software. They spent millions on it, tens of millions on it. And the stock price has basically fluctuated in as a penny stock. I think it was as high as 60 cents and as low as a penny even recently. So here it is. Now, when I heard about Railtown, they ceased being an R&D company and they were out marketing their product. Proprietary, first mover, solves a problem, addresses $100 billion market. Proprietary and closed system, not open AI. So anyway, they're coming out. They're swimming in a pond with Microsoft, NVIDIA, AMD, and some others. I can't remember them all now. And so as they bring in revenue, they're going to run up this valuation curve. A Microsoft is willing to buy up here. This curve is algorithmic. It goes up like a you know, it goes up like when a dead man, when the Rolling Stones sing that song, Start Me Up. It goes up very rapidly, the value, from nobody knows the story, no revenue, to all of a sudden they're claiming 25-30% of a marketplace. It runs. But then the big boys, I went to a hamburger joint, met a waitress there. She could make a big boy in 3 minutes and a boy big in 2 minutes. That was Rodney Dangerfield. Anyway, Microsoft will price their purchase on an arithmetic return because they would rather know it's going to work than to get involved down in here. So this value curve is what Railtown's on. Where does it jump? Well, it's at 40 cents. I think Microsoft would buy them out $20, $30, $40. I don't know. But I think it's going to jump up this value curve. But you don't buy that. You think it's got to do a reverse split. Well, that was my idea on Railtown until they ran into AI partners. Now, I just went through the numbers. I showed you that I could get numbers per share over $100, but then I chop, and I came up with $3.29. Call it $3.50, call it $4 if you want. Railtown has been in a quiet period. You can go look at the news. They announced a memorandum of understanding to buy AI Partners Corporation. You can look at it. You can go to the website of AI Partners. You can go to the news description of the buyout, and you can find out that AI Partners is 160 companies. Now, what you won't find out is their revenues. It was posted by a credible source. We have to wait. But they're going to roll those companies up. That is bigger than my original vision. But even with my original vision, a Microsoft buyout at $20 or $30 a share maybe, or a NVIDIA buyout. Present value that, $2, $3, $4, $5. So what does that mean, Gerald? What's the obvious thing that means? Why the F would they do a reverse split? I don't. The stock is trading at 40 cents. They announced the memorandum of understanding to acquire AI Partners run by Canaccord Genuity about 13 weeks ago, by memory, 3 months ago, by memory. You can look it up. It's, whatever the news story says, that's the truth, not what my memory is. In Canada, the regulatory authority normally takes 4 weeks. I Googled that. But it can take longer if there's questions of affecting competition. Maybe that's why it's taken longer. The stock price is up, Gerald, not down. So I think the stock price is telling you that the deal has not, it maybe ran into delays. Maybe they had to sort some part of the acquisition out to make sure that it's not anti-competitive. I don't know. We'll find out. But the stock price is telling you that the deal has not run into visible yet. It still could, I suppose, but it hasn't run into difficulty. Why the hell would they reverse split? And why would that be a threat? There's no toxic financing. The guys that are running Railtown, you can go to their website. I've shown you. They've done 6 separate companies that were then sold at a higher price. They have experience in it. Yes, Canaccord Genuity runs book for criminals. There's no question about that. But in this case, the principals who have their money on the line are not accepting toxic financing. There's no reason for a reverse split. They are not on the NASDAQ exchange. They trade in Canada. It's just a non sequitur. But even if they did a reverse split, that's just going to change the buyout price or the valuation price. So I guess what I'm saying, Gerald, is what the hell does a reverse split have to do with anything? The whole point of Railtown is that as soon as whatever news is necessary comes out, that allows the investors in Railtown to buy, that allows clients of Canaccord Genuity to buy, that allows all the investors around AI Partners to buy. They're all precluded while the merger is going on. Once the merger is, it's going to be a new price anyway. And guess what? It's going to be above $1, I think. There's some risk in that. So, you know what, Gerald, wait and make sure the stock price is above $1 before you buy. Then you miss out on most of the gains, but that's all right. I'm not gonna criticize your thought. I'm just going to tell you it doesn't make any sense to me, but doesn't mean I'm right. Doesn't mean I'm right. I know my videos are very long. I want to make them shorter. I want to stop doing this, actually. Ham has brought countless thousands of investors into Finger. Yes, he has power. Yeah, I don't know if it's countless. I think it's about 3,000. But that's a lot. That's, you can count that. It's pretty good. You know, Wall Street Wolfie, I don't want to take any credit, but early on, I think my vehicle of reaching people helped a lot. And I think the time I put in helped a lot too. But I don't want to take away. I mean, Ham deserves the entire credit for that. See you all. Okay, thanks for stopping in and then hitting with your piercing questions and leaving. I'll remember. I won't answer your questions in the future. If they think they could win, they would let it go higher. That's true. That's true. Silver's gone higher because we're going to war. there's a treaty with Russia where the bombers have to be out in the open so that we can track how many bombers both side has. And I think we helped, I don't know that Trump did, but I think probably the CIA or the warmongers in our government helped this comedian, Zelensky, go deep into the Soviet Union and destroy bombers. That's an act of war. And I think Russia will declare war soon. And I think Russia will bomb bases in Germany, Ukraine, and elsewhere, possibly American bases. And this can spiral out of control. I think that's why gold and silver are up. I think silver is trading at 100 to 1, basically, to gold. I think the gold-silver ratio will narrow. And I think silver is the single mispriced asset in the world, other than Lauren Sanchez or Meghan Markle. I think they're mispriced. Finger Financials, 188K in revenue from command and control. Oh, I didn't see that. So 188, that must be the first two vehicles, or it's at least one vehicle. It's probably two vehicles. It's not enough information, though, to figure out how valuable the $5 million investment is. That's good, though. 188 in revenue is good for two or one. It's good. I don't know what it means, though. ZJYL. Well, I think I might have talked about ZJYL at somewhere. All right, another 10,000. Michael Lonsky. We're up to 15 distinct investors or groups. Michael Lonsky. $10,000. This is exciting. If we get to $1 million, imagine if it goes to $3 or $4 or $5. Well, I don't. I never repeated any rumors. I don't. Rumors are an interesting spice that you can add to the story, but you shouldn't invest based on rumors. I mean, you can hear them and test whether it's going to happen, but rumors verboten. Rumors are verboten. I'm actually not confusing the two because it happened at the same time. I remember it. I remember Finger being sold 100 million shares in 10 days. They happened at the same time. But you're right. Lou was specific about GTII. It just happened. The excitement around COSM affected Finger as well. It's very incestuous. But I don't know what happened between Lou and COSM. It doesn't matter to me. I'm just calling out that the criminals have ways to interfere with squeezes. And I mean, you can say we can win. And I think we can. I just don't know when. I don't know. I don't know what to tell you. I'm tired of saying the same thing over and over again. Not too late on GBUX. I already am holding you accountable. I found you through Ham. Look, I'm very loyal. Look, I'm not saying anything bad about Ham. Ham just recently has decided to take his message to Twitter, and he's got help with other people. Ham now talks to 3,000 people at a time. If Ham comes on here, it doesn't help him. So it's nothing bad one way or the other. It's just how it goes. Ham met his Yoko. All right. I want to now show you some things now that I got to the bottom. And I can show you some things without what's this? All right, that was something else. What's this? Oh, that was something else. What's this? That was something else. All right, let me see if I can add some things to you. Boom, 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 boom. They're going to say it's too much. They're going to say delete. It's not the right picture. It's going to say it's something I did wrong. So GBUX is at 331. And if you guys were as smart as I am, you would have bought shares at 271 like I did, because I'm so smart. It's very funny. I find it funny. I don't know. I just find it humorous. So today, Railtown I can't believe he's dead. This is, who is this? Too many Qs. I can't believe he's dead. When I got out of college, and during college, I painted houses with a good friend of mine to make money. And I was up on a ladder, and I confuse it with the time that my arm went over a electric connection. But I think the same thing happened both times. I basically went down the ladder lickety split. And anyway, John Lennon was killed, and it was announced on the radio. And I just went down the ladder and I said, I can't believe he's dead. And that's what this reminds me of. And my friend made fun of it because he didn't like the Beatles. Anyway, here's what I want to show you. Railtown made an announcement today. They announced the commercialization of Lang tracks and rail tracks. And this is the point I was trying to make, is the company is no longer an R&D company. It is selling its product. And it's going to be a massive seller, in my opinion, and high margins. So Railtown AI, a leading innovator in the AI-driven developer solutions space, proudly announces the commercialization of its two powerful developer frameworks, Lang tracks and Rail tracks, developed by its subsidiary, Railtown AI Tool Co. Now I've got to find the rest of this story. Following successful public demonstrations at Upper Bound AI and Elevate AI, the frameworks are now officially available for commercial deployment. This is a huge change. in the valuation story of Railtown, marking a significant milestone in Railtown's mission to empower developers with cutting-edge AI tools. LangTrax, I don't know what that is, an agentic framework redefines how developers build AI-powered application. It autonomously selects and executes tasks using various tools, streamlining automation while allowing developers to focus on innovation rather than infrastructure. Designed with modularity and flexibility in mind, LangTrax gives organizations complete control over deployment, ensuring enhanced security, scalability, and real-time decision-making. RailTrax, a universal retrieval and ingestion engine, that sounds like my dog, simplifies the integration of unstructured event data from any source. Its pre-built connectors and dynamic pipeline architecture allow teams to stream, clean, and store data in a unified query-ready format. From powering large language models, RAG applications, to enabling real-time IoT analytics, RailTrax ensures fast, scalable, and reliable data integration. We are incredibly proud of the work our team at Railtown AI Tool Company has done, said Corey Brandolini, CEO of Railtown AI Technologies. LangTrax and RailTrax are not just frameworks, they are enablers. With the rise of open source LLMs and autonomous agents, organizations need more control, more flexibility, and faster time to value. These tools deliver just that. We are seeing explosive growth in the demand for autonomous AI agents across industries, from software development to finance to healthcare and manufacturing. The ability for systems to act intelligently and independently in real time is transforming how organizations operate. That's exactly where LangTrax and RailTrax come in, providing the foundation to build, scale, and trust these next generation AI systems. The commercial launch of these frameworks strengthens Railtown's broader ecosystem, which includes Conductor, the company's other subsidiary for Conductor DPI and Conductor RCA platforms, both aimed at improving developer productivity and root cause analysis through advanced AI. Railtown is a leader in developing productivity tools powered by artificial intelligence. Such a mouthful. All right, the other thing I wanted to show you is NIXX raised money at $1.50. They sold 846,000 shares at $1.50. They did it under the prospectus that's old, shelf prospectus for $100 million. And I think here they have 20 million shares outstanding on NIXX. So those are the things I wanted to show you. I hope it was worth the wait. I can't believe he's dead. I can't believe he's dead. John Lennon. Can't believe he's dead. All right, I'm going to summarize how many Railtown we have, because if we get to 1 million and Railtown goes to $3, we have $3 million that we have to make a decision. Do we do something else, or do we stay with Railtown? We'll find out. I want to see what the news is about Russia. 3 signs the lunatics are back in charge. I agree. By Tyler Durden. Hawks in the West are rushing to support Ukraine and Zelensky as he is busy declaring to Europe that the Ukrainian armed forces have reestablished battlefield leverage. I don't want to read everything he says. He's an asshole. Russia's military has still not gone full shock and awe, but Moscow may be readying for this. Oh, it's horrible. It's horrible. It's horrible. All right, I'm going to read one more thing to you, and then I think I'm going to sign off. I wanted to do more, but I invariably take too long. Okay, so CNN and the risk of fake news. No, CNN is truthful. Trump is not. Okay, we got that clarified. So this is from Martin Armstrong. It is very important. I tried last night until late in the night to find a single major news media outlet that was covering what happened in the Soviet Union yesterday with some sort of objectivity and alarm. I couldn't find it. I could find out about whatever this chick that sings songs, Taylor Swift. I could find out about a football player and Blake Lively, whatever she does. But I could not find out about this war. And it's scary. So anyway, Martin Armstrong wrote, I distinctly remember 8th grade history class, perhaps because of the Cuban Missile Crisis, as the kids' war caught the headlines and everyone's attention. I don't know why he calls it the kids' war. I was about 11 years old at the time. I recall walking with my friends and we were discussing nuclear war. This is Martin Armstrong. So perhaps against that backdrop in history class, the teacher brought up the Spanish-American War and how the media helped create that war to sell newspapers. That statement I always remembered. Yeah, I think that was Hearst, and that was, they put a bomb in a ship. Yeah, I can't remember. Perhaps she, the teacher too, made that connection because of the Cuban Missile Crisis. It was my first lesson in fake news. Little did I know that at that tender age, I would stumble upon a frequency that dictates life, that the New Yorker magazine called The Secret Cycle. From that Cuban Missile Crisis, the target was the start of the war cycle once again in 2014 with the Ukrainian Revolution, which the neocons orchestrated. The constant lies, in the press from Russiagate to Russia's interference in the 2016 election that Hillary claimed she really won, succeeded in convincing 70% of Democrats that Russia was our number one enemy. This guy's confirming what I've said. I love it. All of that fake news has left a scar upon the United States that is still with us as the media continually bashes Trump and elevates Zelensky to the level of George Washington. There were even proposals to place a marble bust of Zelensky in the Capitol building alongside those of Washington and Jefferson. It was embarrassing to be an American and display such stupidity. Who made such a proposal? None other than the neocon from South Carolina, Lindsey Graham, and the neocon Joe Wilson made the proposal, both of them, for the bust of Zelensky. The world would be a lot safer if South Carolina were expelled from the Union. It was the media that created the Spanish-American War. As with all cycles, we have returned to the trend of yellow journalism, which is based on sensationalism and crude exaggeration. Pulitzer and Hearst went head to head. I remember grade school history class blaming the Spanish Civil War on fake news. There is one such story that male Spanish officials were strip searching American women, tourists in Cuba, looking for claimed messages from rebels. This was the front page of Hearst's newspaper, showing what has become known as yellow journalism, whereby the illustration was by Frederick Remington and published in the New York Journal, February 12, 1897. Hearst's New York Journal was called out for this fake news by rival Joseph Pulitzer's New York World, reporting that this story was erroneous, and it graphically illustrated strip searches of a woman aboard a U.S. passenger steamer as fake. The journal article was written by this guy Davis. Okay. This story of the strip shirt was discredited as being unreliable and prone to publishing fakes. Welcome to the present, where the New York Times and the Washington Post seem to be carrying on in the same unreliable manner, as well as ABC, CBS, NBC, and of course CNN. All we hear is how Russia invaded Ukraine, quote unquote, unprovoked. And this time they are cheering on World War III with every breath they take. Trump has come out and stated that Zelensky has lied, and they never informed the United States before they attacked Russia's nuclear bombers for the EU, so they can invade Russia, which has been the plan all along. I have explained, this is Martin Armstrong, that both Germany and Japan are two economies that are shrinking. The risk of default in Europe is actually German, as is the case with Japan. Merz is gung-ho on war because he understands that Germany is in dire condition and is at the risk of defaulting. This is why they have abandoned their austerity and they're going all in for war. CNN ran a story written by Gleb Garinch of Reuters. The anti-Trump pro-war attitude is so clear, he wrote, quote, "When it comes to ending the war in Ukraine, President Donald Trump's statements and social media posts have become meaningless. Receding chances for a ceasefire and peace deal soon will depend instead on whether he finally finds the steel to reinforce his rhetorical lashing of President Vladimir Putin over the weekend with action. The Kremlin is betting he won't. It dismissed Trump's frustration with the most intense Russian drone attacks on Ukraine as a symptom of, quote, a further quote, emotional overload. And experience suggests Putin can get away with calling the US president's bluff. After all, Trump's Truth Social critique of the Russian leader as crazy on Monday was leavened with a characteristic rebuke of the victim, Ukraine President Vladimir Zelensky. Still, the intensifying Russian attacks on Ukrainian civilians appear to be deliberate Russian test for Trump a week after his hyped call with Putin, which made no progress toward peace despite the White House spin, unquote. This is CNN. This second wave of crisis had a turning point on December 5th, 2022, which was the formal implementation date for the $60 barrel price cap on Russian seaborne crude oil imposed by the G7, the European Union, and Australia. This was a significant measure aimed at limiting Russia's revenue from oil exports, which theoretically was being used to fund its war effort. We have pushed Putin into a corner. Either he gets aggressive or Putin will be replaced. This is Russia's Pearl Harbor. The youth will respond just as they did in the United States. This is what NATO has been praying for, World War III. And they are praying that Putin attacks anything in NATO. They have crossed every red line Putin has drawn, trying to get Putin to attack. The media is cheering the destruction of the West as if we can obliterate Russia without ever suffering a single blow. Is this just to sell advertising, or is this just brainwashed journalists thanks to Hillary's lies? All right, let's just see if there's any news in the Daily Hate. There's nothing. There's nothing. It's unbelievable. There's nothing. All right, so I'm going to sign off. Oh, let me see. What do we have here? Lindsey Graham has gone to Ukraine. Yeah, exactly. He doesn't even visit his own victims. I'd like your opinion when insiders. I don't know. I think the news today isn't enough. I think insiders can start buying when they finally announce the completion of the deal. And I think that's coming because the stock price is up. I know that's circular reasoning. I know it is, but that's what I sense. All right, I'm going to sign off. I wish everyone the best. I wish peace in the world. And I can't believe he's dead. All right, cheers, everybody.